Hey everyone! Waving hand sign, welcome back to QIP Capital, your trusted source for crypto trading, investing and strategy education. Today, we are going to dive deep into leverage trading for Bitcoin, what it is, how it works, how profits and losses get amplified, and the risks you must understand before starting. Whether you are new to crypto or already trading, this video will give you a clear understanding of leverage and how to trade smarter. Spot trading versus leverage trading. First, let's compare spot trading and leverage trading. When you buy Bitcoin normally on an exchange, it's called spot trading. For example, if you invest $1,000 and Bitcoin goes up by 5%, your $1,000 increases by 5%, that's $1,050. Simple, right? But profits are limited to the money you invest. Now, leverage trading is different. Here, you can borrow extra funds from the exchange to trade with more money than you actually have. For instance, with 5x leverage, your $1,000 becomes $5,000 in trading power. This means a 5% move in Bitcoin now gives you 5x the impact, good or bad. How leverage works? Let's break it down. If Bitcoin rises 5% and you are trading with 5x leverage, your profit isn't $50, it's $250. But if Bitcoin falls 5%, your loss is also $250, 5 times bigger. Leverage uses borrowed funds, and exchanges charge a small funding fee depending on how long your position stays open. So leverage is like a double-edged sword. It multiplies gains and losses. That's why understanding leverage properly is critical before trading. Long and short positions. One of the coolest things about leverage is that you can profit whether Bitcoin goes up or down. White heavy check mark, expect it to rise? Open a long position. White heavy check mark, expect it to fall. Open a short position. Example. Deposit $1,000 and trade with 5x leverage, $5,000 total. Bitcoin rises 10%, you earn $500 profit, $1,000 becomes $1,500. Bitcoin falls 10%, you lose $500, half of your investment gone. So leverage gives flexibility, but the risk is very real. Risk management. At QIP Capital, we always emphasize risk management. Yes, leverage can boost returns, but it can also wipe out your capital fast. Key tips for safety. Always set a stop loss. This automatically closes your trade if your loss reaches a set limit. Example, stop loss at -$50, maximum loss $50, no surprises. Never trade more than you can afford to lose. Modern exchanges ensure you can't lose more than your deposited amount. Once your collateral can't cover losses, your position is automatically liquidated. Extra tip, experienced traders often combine leverage with position sizing, technical analysis, and risk-reward ratio to manage risk effectively. Practical example and tips. Let's do one more real-world example. You deposit $1,000, use 10x leverage, $10,000 in trading power. Bitcoin moves 3% in your favor, profit is equal to $300, amazing. But same 3% drop, loss is equal to $300, your capital drops quickly. Tip from QIP Capital, start small. Use low leverage first, understand how it affects your trades, then increase as you gain experience. Never chase losses, discipline is key. Leverage trading can be a powerful tool if used wisely. It allows you to maximize profits, trade in rising and falling markets, but requires discipline, risk management, and proper understanding. If you found this video helpful, don't forget to subscribe to QIP Capital's YouTube channel. We post weekly videos to help you master crypto trading, strategy building, and risk management. Thanks for watching. This is QIP Capital, helping you trade smarter every day.